don't know where that music makes me want to go, but I think it's somewhere nice. When you are looking at real estate right now, it is difficult because people want to wish they bought 6 months ago. And people wish that their houses were a little bit less expensive, or they could offer 20% under asking price like they would have a year ago. And as things start to go up, undoubtedly, the confidence begins to snowball, and people who are on the fence decide that it's their turn to jump in. And it's not just in buying a house, it's also in investing. And it's very common, not just in real estate in Seattle, but if you look at the investment markets, the higher the markets go, the more people jump in. Yeah. And Johnine Larsen joins us from the Real Estate Gals at RE/MAX with over 20 years of experience in the industry. And, well, first, welcome. How are you?
Oh, good.
Good.
Yeah, it's fun to be here.
Well, it's fun to have you. And, real estate, it seems to be the cocktail conversation again, doesn't it?
Yeah, we're back again.
We're back.
Yeah.
I like it. Stevie was just telling us a little bit about investing in real estate. And there's a lot of different ways to do that. I mean, nobody just goes in and becomes a builder.
No,
anymore.
That's a little tricky.
That was 2004, right?
Yeah,
Everybody who had money was going to be a builder.
Yeah.
But there are other ways people invest in real estate, which is really something that you help them with.
Yep.
Tell us a little bit about some ways that you're seeing people invest in real estate today.
Well, I think that with interest rates where they are, it's very attractive to look at buying property, not just for your own use, but possibly for investment. And with the uncertainty in stocks and, interest rates for CDs and things being so low and prices being so good still with real estate, that it's smart to consider investing if you have the emotional stability to be able to do it and the financial ability to be able to do it.
Yeah, I really want to get on that emotional part in a second, because that's such a key indicator of what people should or should not be doing and how much they should take on. But, you talked about this it sounded like a little bit this path, building equity with your residence is one. People are flipping, they're purchasing bank owned, but all of these are really to kind of produce some level of income. Isn't that more of the investment style now rather than the quick buck?
Well, it depends. I mean, there's all kinds of ways to make money in real estate. You just have to know what suits you the best. And usually I like to sit down and talk a long time with people about what their goals are. And sometimes it's equity building in their own home. How can they maximize what they have? Sometimes they're talking about, do I want something for my retirement so that I have some kind of income when I retire? Other people want to build their fortune. And there's ways to do it. You just have to be very, very smart. And it's a different set of tools that I might have suggested 10 years ago when everything was appreciating. So you have to be a lot more cautious now than you ever did before.
How do you help somebody be cautious?
You try to steer them away from their emotions as much as you can. Because if you want to be a smart investor in real estate, you can't say, oh, I love that house. That house in Green Lake is just the greatest house. Well, it might be something you want to live in, but that's not necessarily what makes a good investment. I mean, maybe you should be looking at duplexes in West Seattle instead because it's better value. So you have to look at what the rental potential is, how much you can rent it for, how much money do you have. I mean, maybe you can't invest in a house in Green Lake because the average price range is $450. You should be looking for houses maybe in the $300,000, $250,000 range that still rent for $1,500, $1,700 a month. So, I mean, you really have to sit down and analyze where you are, what you want, and where it can happen in the city.
I love that you bring up the fact that you're not going to be living in this most likely, because isn't that kind of the first step? I mean, and I imagine when you start working with your clients, it's that first, okay, let's take a step back. You don't need the fanciest house.
Yeah.
Because, you're going to be renting it out.
Yeah.
And then you see a lot of people who do a lot of real estate, who own a lot of real estate, and they're like, oh, it's a rental. Yeah. It's okay, it's a rental. And there's that divide, I guess.
Well, it's a match that you have to make. I mean, everybody is different about what they want. I mean, for instance, just because I think something might be a great investment in an area of town that somebody's unfamiliar with, sometimes people want to talk about their investments and be proud of them. So they want to own in areas that they're familiar with. Say, oh, yeah, I have a house in...
A couple rentals in Medina.
Yeah.
Waterfront, they're great.
Yeah. So, I mean, it really matters. I mean, I have a couple of clients that we've looked at multifamily properties. They bought a 5-plex, they bought a duplex now, and they're looking for another property. And they like nice properties. And the problem is that they don't pencil out as well. I mean, you have to really, if what you want to do is really make money on real estate and investment property, you really have to look at the numbers and your long-term goals.
Is that more or less common, do you think, now to really look at the numbers than it was maybe 4 or 5 years ago? I mean, it seems like before it was everybody was a winner, right?
Yeah, right.
It sounds like a crap. Everybody's a winner, right?
Yeah.
And now you do have to, like you said, be more cautious, but, pencil it. Does it work? Does it really work for your investment goals?
It's hard. It's really hard. I mean, it's hard to get loans right now. I mean, it used to be that you could get into an investment property and maybe just have 10% down. Now you have to have generally 30% down to be able to get into a property. Sometimes, people come to me and they say, well, I have cash and I have this much cash I want to put into it. But you have to look at the numbers, and buying with cash is not always the wisest thing.
Well, not when rates are at 3.5% to 4%.
Exactly,
right?
Exactly. And you get the deductions and everything. And there's a lot of really nice properties out there that, because of the REOs for the bank-owned properties, you can get into those now. You can get into short sales. And if you're an investor, it doesn't matter if you takes extra time to get into the property.
And so really taking, like you said, taking that emotion out of it allows you to really understand, I guess, make rational decisions on the purchase.
Absolutely.
Okay, so let's talk a little bit about the emotional and financial limitations. Because financial limitations, as you said, you can't put 5 or 10% down on an investment property. You have to know what you can go purchase. What are some of the other big financial limitations that you're seeing? Are they mostly lending related, do you think?
Oh, no. I mean, I talk to people all the time that they just don't have the personality to be owning property. I mean, if you're somebody that's very conservative and constantly want to know where your money is and what it's doing all the time, real estate has some risks that are involved with it. You're dealing with human beings. You have to have the personality to be able to do that. If you want to self-manage a property, you have to know that you have to have some negotiation skills with your tenants and be able to get through some issues that may come up with the property. You want to know that you are, whether or not you're handy. Are you going to be, doing some maintenance things on the house? You get a call at 10 o'clock at night and there's a leak. What are you going to do? So you can have
On our show, we quit freaking and we call Beacon.
Must be a sponsor.
We love them. We love them. But, so there are all those things that you have to be able to manage.
Yeah, you do. You have to be able to manage. You have to know why you're owning a property. I have in the last couple of years, we've had friends that have come to us and wanted to say, I just want to get rid of this property. I hate being a landlord. And you have to know if you like to be one or not. And you can, the other side of it is you can hire a management company. You just have to know that financially it makes sense for the properties you're buying. And
be able to pencil that in also,
right,
because you have a cost there now.
Right, exactly. 7% usually on average of gross monthly rents.
So what do you see then as far as people intentions now? I mean, is there a lot more intentions to hold a property? Have people you mentioned being conservative. I don't know if holding a property is more conservative or taking the money out when it's available is more conservative. But where do you see people's intentions right now?
Long term. People are looking for long-term wealth building. They got hit on their IRAs. They got hit on their stocks. There's a lot of people that are, entering middle age that are like, oh my God, my investments just dropped $200,000. Well, real estate is, I can't speak of anything I think is better for retirement than to have rental property. And the fact that you can do tax-deferred exchanges, it just opens up so many possibilities. I can't speak more about it. I think it's really something. If someone's able to do it, they should get into it.
We're here with Johnine Larsen with the Real Estate Gals. Johnine, we have just about a minute left, but you mentioned getting into exchanges and whatnot, and I don't want to get too deep into the tax side, but do you see people who are moving up into bigger investments as they accumulate a few? Because Maybe there's less property management if you have a small, maybe a fourplex or a couple of them versus the single families or the condos that they had bought.
Oh yeah, absolutely. I mean,
consolidating in some ways.
Absolutely. Some people will have 3 rental houses and they'll trade them up for a fourplex, or because they have that much equity. It makes sense to consolidate things if you can. It's easier to manage. It's less repairs, less capital improvements.
One roof.
Yeah, one roof. Yeah.
Makes that right there.
Yeah,
I mean, how much more is there to say, right?
Yeah,
one roof.
Right.
Johnine, we have to go to break. Thanks so much for joining us. Again, Johnine Larsen, managing broker with the Real Estate Gals at RE/MAX Northwest. When we come back, a lot of, you may think about consolidating all your rental properties into a fourplex or into a big multifamily. But what if you're just thinking about buying a bigger house before prices go up and interest rates go up? Ryan Leopold will join us next. You're listening to Brashenomics.